Why should you sell right now? That's what we're discussing today. Hi, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients. So I'll share a story with you. And the way this happened to me was a little unfortunate. When I bought a property, now this was back in the 2004 or 5 days, I bought a property. It really shot up. It really went up. And I think I was up about 75K, somewhere in between that price point. And I said, you know what, I'm gonna hold on to it. I'm gonna hold on to it. Well, a year later, that 75K was not there anymore. And I remember regretting that because I would have doubled my money. I really would have truly doubled my money. I was cash flowing very well and the equity was there. I'm wondering every time that haunts me because I said the money was on the table, what was I thinking? And I say this to everyone, if you're ahead and you've achieved your goal and you've made it, it's what do you know, again, if this is something you want to save for your heirs down the road, 30, 40, 50 years, something to do. If this is something you want to sell in a couple of years, start evaluating, can you sell today? Should you sell today? And just look at what do you have to gain or lose right now. So that's I want you guys to notice, this has happened to me. And when I tell someone that, I'm not taking it lightly, I'm just letting you know this is the reality of the situation. There's two things that I discuss with everybody before they sell, or if they're deciding, hey, is this the right time? Now, if you've bought commercial real estate or any type of real estate in the last 7, 8, 9 years, you've probably seen some gains, hopefully, right? Now, there's two types of gains that you're looking for. Now, there's a lot other ways to profit from a deal, but I'm just giving you two to focus on. The first one is cash flow. Have you been cash flowing consistently, right? So is enough cash coming in to where you're looking at your investment and you've recouped a lot of your initial downstroke, or pretty much all of it, or you're really up in the green now. That's kind of your first barometer. That's what you want to gauge right there. So if you've been making good cash flow and you've increased the value as much as you can, you cannot get any more cash flow from this thing. So if you have an apartment building and it's a 1-bedroom unit, you took it from 600, you've maxed it out to $1,000 a month, you cannot go anymore. The market will not let you. You've maximized the potential right now. Maybe 5 or 10 or 15 years, sure, rents will go up again. But if this is where you are, if you have investors in the deal, I understand it could be different. If you have partners, I'm just painting a scenario where if it's just your deal. So you bought the property yourself and you've been making good steady cash flow, and now maybe it's time to get rid of that property. It's something to consider. Number two, the second thing is equity. Do you have substantial equity in the property? So maybe you're not cash flowing as much. Maybe you didn't cash flow at all, but you bought the property, let's say for $1 million, and you've juiced the value up to 1.5, maybe $2 million. It might be time to look to deploy that capital elsewhere. Maybe you want to hang on to it. Maybe you think there's more potential. But the second thing is, if you've doubled your equity, I tell everybody it's kind of time to protect yourself, get those chips off the table, because you've gone above and beyond what the average investment is, right? Most people don't go into an investment, think they can double it immediately. And if maybe you got lucky, maybe the timing was right for you, could be a number of different things. Maybe it's strategy, you specifically knew that property was gonna do exactly what it was gonna do. So you bought it and you're doing very, very well. Again, if you have investors, syndication, you have partners, that's all different. I'm talking about if it's your own deal. If you have a property you bought, so you bought a retail building, $2 million, now you made it worth 2.5 or 3 million. Your options are, okay, do I get out of this thing or what's going on? Now, the reason I tell everybody right now, start thinking about selling is because the market is very attractive. It still is a seller's market. I know people think that it's moved and it's shifted. It will eventually. But right now, rates are very favorable. Money is still inexpensive. And finding what to do with that capital, there's limited space. And if you're one of those guys that time to sell because you have the good fortune of selling without losing a whole lot, probably something to consider. And those are the two things you want to weigh out. And if you don't have anything else to jump into right now, maybe you want to do a 1031. It might not be a bad idea to just wait till you find the right property. Start looking for the right property while you're evaluating what to do with this property. It's just an option. I tell everybody, look, if you've cash flowed very well or consistently, and if your equity has really geared up. Now, if you have both those things, it's a no-brainer. But if you look at all that, if you add up all the cash flow you've had for 2 or 3 or 4 years, however long you've owned it, deduct that from the initial investment and what your gains will be when you sell it, then see if that makes sense for you. If you have, again, everybody has a different tax situation. I'm not getting into that. I'm talking about gross numbers. So look at the gross investment. If it makes sense for you, something to consider. That's how you should be basing your decision. The question today is, have you increased the value of your asset enough to consider selling? Like this video, subscribe to this channel. Questions or comments, I love answering them. Thank you so much for watching.